Welcome everyone to episode number 3 of Asheville Real Estate Monthly. We just wrapped up the second quarter, so I figured this would be a good way to start with a little market update. If you could kind of fill us in on what's going on residentially and what changes we've seen in this quarter, and maybe compare that to what we saw last year at this time.
Yeah, sure. So not a whole lot of change. We're still on kind of the same trajectories in a lot of those areas. The main difference being, home values are continuing to increase, but at a slightly slower pace than last year around this time. So we're at about 5.4% increase this year so far, whereas last year it was, at a really fast 8.3%. So, that's still good news for sellers. More good news for buyers being that we do have a little bit more overall inventory on the market. Now, we are still seeing kind of a lack of inventory in those under 300,000, price range, which is kind of driving those prices a little bit higher. And another thing would be interest rates. They've been on a steady decrease since the beginning of the year, and they actually in quarter 2 hit an all-time low for the past 3 years. So, that's causing a lot more movement, and we've actually had a big increase in the first week of June in applications for new loans, new mortgages.
Yeah, so it sounds like we kind of talked about that last episode, but that, again, decreasing, interest rate is creating some extra buying power for some folks, it sounds like. Yeah,
and then another good point is right now is a really good opportunity for, homeowners that maybe are in that under $300,000 price point where, we don't have a whole lot of inventory. Those prices are continuing to increase faster than some of those higher brackets. So with the interest rate so low, you've got a little bit more buying power. You can move up to one of those price points where we have a little bit more on the market and have a little bit more competition there to sell your home and, just stand to make a little bit more. So it's a really good time for sellers and buyers, so we're seeing a little bit more balance, and that's really exciting in our market. What can you tell us for the commercial realm? Any changes so far this year compared to last year?
So we really haven't seen a significant change since last year at this time or in the last quarter. But what we have seen, I would call it, is a softening of the market really overall. So, we've seen slightly less transactions compared to this time last year, both buying, selling, leasing, you name it. We've also seen vacancies come up slightly. Again, just slightly, no big warning signs or anything like that, I would call it. It's really just a leveling off and softening from this, this incredible rate of growth we've seen in the last, 7-8 years really. So, the big question a lot of people have when I talk about the market softening is a bit of fear. I think a lot of people permanently have some fear after the last recession of, is the market going to turn around now? Are we seeing some sort of signs of a coming recession? And, I don't think so at all. Again, it was just a softening as I described it. And the positive is what I say is this is a really good thing. We're seeing some resistance to the market finally. We look back at the previous recession. What was the challenge there? There was really no resistance to the amount of spending and lending that was going on. We're starting to see that resistance now, and it's kind of correcting the market in a positive way in my eyes. So what I'm seeing when I say that resistance is we're starting to see buyers that aren't just willing to sign a blank check for a property because it's maybe a prime piece of property. We're starting to see people go, look, these numbers don't pencil. There's no way we can buy this for what our business does and have an NOI that makes sense. On the other side of that is we're seeing lenders tighten up, both banks and private equity. We've started to see, especially in this last quarter, where those lenders are no longer just freely lending money as they did before. They're starting to really look into what those specific assets are and being a little bit more firm on the decision making.
So when you talk about this kind of tightening up, but things are still good, are there areas that maybe investors or businesses should be a little bit more leery of, or?
So I always caution people, this is something I always talk about with my clients. I never like to tell anybody there's a really great part of the market or a really negative part of the market, because it really depends on the specific property and the specific business, usage, you name it. So with that said, though, something I'm keeping my eye on, and I think everybody in the commercial real estate world really should, is the retail world. This is something we've seen the start of a pretty significant, what I would call a revolution, and I think we're just at the beginning of it, and I think the elephant in the room, obviously, is the big names like Amazon that have, totally changed e-commerce. I mean, now we've got 2-day prime shipping with the discussion of 1-day shipping. Stuff like that has really been an interruption to the retail market as we know it. So, what we're seeing is some of the traditional retail approaches aren't working as well as they used to. And a good example of that would maybe be like locally here, malls. So we've seen the proposed project for the Asheville Mall, and turning that into kind of a mixed use space to better utilize that space and kind of a live, work, play environment. Additionally, the Asheville Outlets is a great example. A property that just years ago, that mall was sitting with probably 50% or more vacancies, and simply a structure and marketing reapproach turned that into a thriving, top of the market, retail experience. And it's really driving visitors to come shop there from out of town, out of state. So, little things like that can make a big difference. My caution is, if you're an investor and you own retail property, just start paying attention to that. And especially, if you own property that may be big box leases, stuff like that, the big box market hasn't been doing that great. How can you utilize that property if things went south for a tenant? And if you have a larger, maybe a plaza or a shopping mall, how can you reincorporate that property into new uses? We've seen stuff like shared office space is something that's been thriving in those environments. Mixed use, like the Asheville Mall we talked about. Can we put residential in there? Maybe some office space, entertainment, you name it. So just something to think about. Again, nothing to scare anybody, but that's an area that I think just needs attention if you're an investor.
Well, great. There's nothing too scary there, and some wonderful food for thought.